Sunday, the 8th of November 2020. I thought it would be a good time to do a bit of a macro view of the gold market and some of the other major world indices. Just as now with the election behind us, the market can sort of look ahead to what's next, and particularly for gold, I think we've had a decent consolidation here. So I'm just going to talk about a few things in some of the broader charts. If you're new to the channel, this is a free video I'm putting up on YouTube. I do publish a lot more videos on the Patreon page. There'll be a link on the screen now. So if you're interested in this sort of content, doing a couple of videos a week, mainly about gold stocks. So just analysis, a lot of the quarterly reports. I know I've probably done 10 to 12 of the major ASX gold mining companies there and analyze their quarterly reports in the last couple of weeks, and they're all uploaded to the site. So if you're interested in that sort of content, feel free to subscribe. It's $6 a month. There's also a lot of analysis of developers as well, and explorers, and a few thoughts on there, and always willing to have a look at any stocks that people throw out in the comments and stuff as well. So have a look at that if you're interested. So the gold chart, we've had this really probably 3 months now of sideways movement. It's been a fairly modest sell-off, actually. I think it's probably, if you said after we had this massive, almost parabolic move for a couple of weeks in July, I thought maybe that sort of ends badly when we come back down. But we've held relatively stable around this 1850 was kind of the lows in the last couple of months. And that seems like it's going to hold now. We've almost formed the double bottom around that 1850 and broken out above this. I've got this big purple dashed line there at 1920, and that's the previous all-time high in 2011. So I think that's kind of a key level, and it looks like we've broken out sort of fairly decisively above it this week. And now we'll see if the markets can really keep moving higher, but it does look pretty constructive. I mean, I thought we didn't even get down to some of the other resistance levels or support levels, that I was kind of looking at. I thought this 1820 might come into play. That was sort of the point at which the market really took off. You can see there after a brief consolidation, it just went vertical for about 6 straight trading days from 1820 to straight through to 1960 there. So I thought maybe we'd get down to that, but it's been a pretty good move really for a pullback to only be down kind of in that 15% pullback sort of move. For gold, that's very good. Generally we get probably steeper pullbacks. And I've talked about the long-term chart plenty of times before, but we're really sort of every move up has always got some correction. There's a corrective wave in here in this move from 2009 to 2011. We had these orange boxes here. I've got the 5 months, 4 months, 3 months, 2 months, and we've had 3 months now of correction. So whether that's enough, I'm sort of a little bit torn both ways. I think this, with the election gone now, and it looks like monetary policy is going to continue to be supportive, and all the sort of tailwinds are still there for gold. That you'd think there might be enough for it to keep moving, and we are into a kind of a seasonally strong period for gold, and generally in that bottoms in a lot of the time in the late November, early December. Probably for, I reckon, 5 or 6 out of the last 7 or 8 years, we've had a bottom in that time period, and then ran up very well in January and February. So it remains to be seen there, but from a chart perspective, it was still looking pretty constructive here. And I think holding above that 1920 now, I think we could probably retest 2000 and maybe back to that high that was set in August as well. So it's all looking pretty good from that perspective. From a couple of other charts that are interesting me at the moment, I mean, the Australian dollar chart is an interesting one in that it's really just mimicking the gold price chart, and this is all just one story about US dollar devaluation, I guess, effectively. And Australian dollar had that what looked like a double bottom there around 70 cents and is sort of holding above. So it's almost identical to the gold chart in that respect. And even this is despite the Australian Reserve Bank doing their own QE, starting that program in earnest. I guess I did have a short position in the Australian dollar, but I sort of came to the conclusion that if we're going to go into the devaluation game and QE game, the US is far more developed at that game and is going to beat us every time. So I sort of stepped back from that short position in the Australian dollar because I thought that, as I said, I think the US is far more seasoned in that game. So, and they seem to be holding true to that. But in any case, the gold price, you can see in Australian dollar terms, the gold price has actually been extremely stable for the last 3 months. After the initial sell-off from the highs, we've basically flatlined in this very tight range between 2630 and 2700. So it's basically a perfect match for that. What I'm saying is that it's all about US dollar devaluation, currencies, commodities, and everything priced in US dollars is practically sort of showing a similar kind of chart. And so I'll be interested to see what that Australian dollar does. I don't think it's going to rocket higher. I think there's still sort of structural weaknesses in the Australian economy, and they will try and devalue it. If the Australian dollar gets up, starts moving towards sort of 80 cents or something, I'm sure the Reserve Bank will try something else to try and pull it back in, because it's that perceived thing that a rise in currency is bad for us, all that sort of stuff, kind of nonsense in my view. But that'll be interesting to see. The S&P 500, I thought we've had this getting toward almost like a blow off top type scenario here with the trading action the last 4 days, with Biden winning the presidency. It was almost always perceived that a Biden presidency would be bad for the market. But I think because the Democrats failed to win the Senate, there's going to be kind of that gridlock in Washington, and there's not going to be any of the aggressive policies toward the stock market, which might, around capital gains tax increases or around corporate tax rate increases. That's going to they're not going to get that through the Senate if it's Republican controlled. So that stuff's still going to be held up. So the stock market's kind of having a bit of a relief rally. The problem is it didn't really sell off much in advance of the election. Maybe, you could only say that probably these 2 or 3 weeks here, we sold off, I don't know, about, what's that, 8% or so from the highs to lows there, maybe 8 to 10%. Didn't sell off much, and it's regained all of that. So my feeling was, the market's now just pricing in pure monetary support here. There's that fiscal stimulus will come at some point as well, but the market's really concerned about monetary support, and that will continue to be prevalent, I'm sure. But there's an argument here that we could be sort of forming a double bottom continuation as well at this. Maybe it breaks out above this kind of previous high at 35.90 there, sort of thing, and then goes another 300 points higher. Like, anything's possible here, but we're really feel like we're reaching kind of an end point here, and my main question is what's going to drive this market even higher. Some of the stuff that's happened in the wake of this pandemic, that there's massive problems in the US economy that haven't been revived by monetary policy. The virus is still rife as well, so that's another drag. But the market doesn't care about any of this, the stock market. But you wonder if any of that stuff can really start to have an effect. But it's definitely had a bit of a blow-off rally the last few days from my perspective. So getting toward that trend line that's been following for the last since Trump was elected. Really, this was the Trump election in here, but since 2016, it's been following this line, and every time we've peaked above it, it's a bit of a selling point. So I wonder if there's enough ammo from the Fed that can really keep pushing it higher. But something has to break here at some point in some of these tech stock names. I think also there's this perception that maybe the tech stocks are going to come under less threat, but I think there's still a risk there that the Democrats might try and control some of those tech stocks and the market power of Amazon and Google and these sort of companies. And I don't think the Republicans would be opposed to some of that stuff, considering they all kind of have a few grievances with social media companies and such as well. So this big tech, I think, is definitely going to come under fire at some point, and that's really been the driver of this market, particularly since the bottom in March. It's all these tech stocks that have pushed it back up. So I wonder how long that can keep going. But that's been the same story for years now. But at some point, it's going to snap, and I wonder what that trigger will be. A couple of other things. I mean, copper is an interesting looking chart again on that kind of commodities theme. Very strong chart. for the last since the bottom in March, and now we're well above where we were even last year. So this has recovered all of the pandemic losses since January, and now it's just going a lot higher. And this is really a story about inflation. I mean, all of these things are inflation related, I guess, but copper's kind of often used as a bit of the barometer. And you can see there, it's almost forming a kind of a double bottom again. A lot of double bottoms here, but on the longer term chart, at that $2 a pound level, with a breakout level above 330, you can see this really moving a lot higher. And I like the fundamentals of the copper market in terms of supply shortages. I think there is not many new good mines coming online, and that might come in here into play as well. So you've got these sort of inflationary effects and sort of structural weaknesses in the market that mean that prices sort of need to go higher, I think, in the longer term. So whether this can break out above there will be one to watch, I think, as well. And I'm not sure if the commodity space has really built that in at the moment. Some of the stock indexes, GDX is the gold mining index for the mid to large cap miners. Really nice looking chart here. Nice sort of flag formed since since August highs, and breaking out, just peaking above it the last couple of days. Nice sort of gap up on Thursday, and then this nice consolidation there as well. There's still not a lot of interest in this market. I feel like the gold stocks are still not, maybe in the period in August they're starting to get a bit mainstream. You heard a few people starting to talk about gold and that don't normally pay too much attention. But it does look like a good chart. It's really hasn't pulled back. Like the pullback was pretty shallow after this nice move, and on the long-term chart, it really looks excellent there when you zoom out, and we're well above that sort of confirmation line, and nice sort of constructive move there, and looks like it's got the ammunition to go higher. And you can look at that volume there as well. That's a good sign. We've got declining volume on this sell-off in the GDX, and that's a really good sign. In an uptrend, you want that big volume on the ups and sort of lower volumes on the downs. But I don't think still not seeing much mainstream interest in the gold miners. There's seen a few dividend increases from some of the bigger miners that may attract a bit more attention, and we're getting a lot of cash generation in these big names with gold above 1900. The juniors chart looks pretty similar. Pretty similar indeed there. So it's probably actually shallow, even a more shallow pullback, and held that line about at what's that 52 there. Really nice pullback to that sort of breakout zone on the long term kind of 10-year chart, which is as far back as the GDXJ goes, but still looking very good there. And the move from kind of this 18 level to 50. The longer term sort of target here is kind of up toward 80, 82, and then after that, who knows? But I think you can still, it's definitely another kind of complex double bottom over the last 6 or 7 years of consolidation can go toward 80 as a target there. So that's what I'm watching. I guess one of the other things that I've been looking at, and as I just said, I do all the analysis of the ASX Gold Quarterlies, and particularly that mid-cap space is where I've really paid a lot of attention over probably the last 6 or 7 years, read a lot of the quarterly reports and listened to any public information that's available basically. And one thing has really been this rising cost trend of a lot of the mid-cap Australian names on the ASX. Most of these companies used to produce sort of sub 1,000 Australian dollars an ounce, all-in sustaining cost this is, and that was in September 17. And you can see over the last 3 years that we've had probably most of these are producing at a maybe 30% plus higher cost now. So they've eroded a lot of that margin they've gained from a higher gold price. They've also eroded it from cost pressures creeping in, and I think that's particularly the last set of quarterlies that I've just analysed recently. A lot of them had quite decent spikes. Some of these will just be fluctuation that will smooth out, but some of these companies have got structural problems in the sense that a lot of the good deposits are dwindling. They're getting lower grade, they're deeper, or these sort of things. These trends are not going away, and this is a trend in the whole industry. So one of the things I focus a lot is the developers and who's got good projects that could be targets for acquisition. And I think this tells the story that these sort of companies are struggling to maintain good low cost production. So projects that have those qualities will be attractive targets as well. And that's one of the things I try and talk about. But that's a broader sort of theme. I mean, you can see it on a chart like Regis. This is a stock that's, even with the gold price at these levels, is back to where it was kind of 2 years ago almost there. So there's a lot of fluctuation in these companies, and that's why I focus a lot on the quarterlies and production trends. You've got to be aware of these things, because even in a good gold price environment, these companies can have bad patches, and I think that's where kind of opportunities present if those bad patches are temporary. And I try and look at all the fundamental information to get that sort of view. We also saw that the merger of Saracen and Northern Star, both of those companies' charts are a lot different, still pushing at near the all-time highs, and that merger is expecting to go ahead toward the start of 2021, where Northern Star will absorb Saracen. So that's another, I think. And Saracen, if you look at that chart, was probably the one company that's really kept its costs in check, and it's probably had the best looking gold chart for the last 2 years among those mid-cap names. You can see there it's between 1,000 and 1,200 in 2017-18, and it's still between 1,000 and 1,200 in 2019-20. So they've been able to control those costs. Probably that's mostly behind them now. I think that we will probably have a rising cost trend as well. Not that we'll see it once they're absorbed by Northern Star, but that acquisition by Northern Star, I think, will create a good, another true major on the ASX for some institutional money to go into. So that's probably all I was really looking at on the macro side of things. As I said, I think the gold chart looks very constructive again. Haven't heard many people talking about it. Sort of a lot of the speculative money's maybe moved on a bit in the last couple of months, got bored with it, moved on to something else, moved back into tech stocks, Afterpay, all this sort of stuff. So I'm wondering if there's now enough legs for this, it's worked off enough of the excess that had built up over the last 6 months, and then worked down gradually over the last couple to move a bit higher now. So that's what I'm watching, and hopefully we can see gold continue its uptrend here, and anything is possible. I think on the upside now with the long-term chart, it looks like this huge sort of rounding bottom, and then now we're into kind of blue sky territory. If we break decisively above 2,000, anything is possible, I think, in this sort of environment. And the Fed being ultra supportive, governments being ultra supportive, and we really have that prospect of kind of a stagflationary environment. So hopefully someone's got something out of that. And if you're interested in any more content like this, have a look at the Patreon page where I upload videos every week. Thanks very much.